All right, hello everyone. Tim Davis coming to you guys with another market review. Today is Saturday, September the 23rd, 2023. Taking a look at start by taking a look at the daily chart, daily charts. I'm going to start by looking at the SPXA 200R, which is the tool that tracks the percentage of S&P 500 companies trading below their 200-day moving average. And I want to start this out because this is pretty much shows you what the overall momentum of the market is. All right, and told you guys before, I said if you get below the 50 level, or above the 50 level, get above the 50 level on the way up after a reversal, then normally that's a sign that the overall market is starting to become more bullish than bearish. However, if we drop below that 50 level, then the overall market is starting to become more bearish than bullish. And what did we do this week? Well, for a while, we were hanging right around this 50 level. Right around that, we were hanging around there for a while. And all of a sudden, we finally broke below it. That is a bearish signal, folks. So, needless to say, I think the overall sentiment of the market is starting to turn much more bearish than bullish. So, keep that in mind as we continue to go through the rest of this month, the rest of this quarter, the rest of this year. That the overall sentiment of the market is starting to turn more bearish than bullish. All right. With that said, we had a lot of selling going on this past week. So we are in some extreme oversold conditions, even in this particular tool. See that extreme oversold condition, we drop below a level of resistance, a level of support. With the gap right here, the gap fill, with the gap right here. So what could we see on next week? We could definitely see this gap be filled, but keep in mind that we are now below major moving averages. So price action is now below its 20-period moving average and its 50-day moving average. We got a crossover there with the 50-day crossing back above the 20-day. That's also bearish, and that was happened back in August. And now price action is pretty much almost staying muted below these major moving averages. So what can we see in this percentage tool? Definitely could see it move back up. There's a gap fill, so we could see it move back up towards, back up towards this 50 area. So we get back up towards that 50% area. And right now we are right around 41%. So that means we got 41% of S&P 500 companies that are still trading above the 200-day moving average. We got about 60% that are not. So we could see that move up back towards that 50. Then I think we have to see what happens once we get there, because that could be a definite role reversal. We could see a definite reversal back to the downside pretty quick, fast, and hard. So we have to see what happens. But I think the bulls may make a run as we begin the week next week. But again, the overall sentiment is definitely negative. So whatever run that the bulls may try to create, it's probably going to be muted by these moving averages. These moving averages are probably going to act as strong levels of resistance now. So every time we get back up to these moving averages, and we've seen some of it here, and here. So we got back up to these moving averages. We've seen what happens. Right back down, up here, right back down, up here again, and right back down in a big way. So what could we see here? We can see it move back up, possibly fill this gap, hit the moving average, and possibly come right back down. So I don't think we're going to see much movement now above the 50% level. So I don't think we're going to see much movement above the 50% level, where we're going to probably see stocks stay, 50% above the 200-day moving average, 50% below. Then after next week, this thing could really start to reverse again after we get out of it next week, starting headed to next week. After we get out of this week coming, heading to the following week, we could see this percentage drop below 40. So we have to see what happens. But this week, going into this week, since we had such a bearish week this past week with multiple red days in a row, we could probably see some type of reversal where the bears try to recoup and try to rejuvenate itself. Look at the CCI, definitely in oversold territory. Same as full stochastics winning percentage. So near term, we could see a little bounce in this particular tool. What does that mean for the markets? That means we could probably see a bounce in the markets as well. I'm gonna, before we We switch out and take a look at the VIX. I want to look at a a weekly chart here. Weekly chart also shows it's starting to hit some oversold conditions, but look at this particular trend. See that downtrend? Since the beginning of August, the weekly chart has been been in pretty much a downward motion, downward channel since the towards the beginning of August. Been in this downward channel on a weekly chart. Okay, and that's coming from, oops, sorry about that. And that's after we've seen what appears to have been, point this out as well, double tops in this particular tool. And what normally forms up to double tops, here is a bottom, should I say the bottom area, and we pretty much broke below that here recently. So that's strictly bearish, folks, even on a weekly chart showing you a lot of bearish activity. All right. Let's take a look at the VIX. And what do you know? It's a weekly chart of the VIX. Look at that big, strong green candle we got on this past week. Big, strong green candle right up towards that 50-day moving average. Okay, so there's a lot of bullish activity in the overall market. I mean, in VIX, a lot of bearish activity in overall markets. So that big, strong green week, we could see this reverse right back down to this moving average at around 15. And I think we're going to possibly start to see VIX start to hold support levels. I don't think we're going to see VIX go back to 13. That's just my personal opinion about anything that happened this week. But I don't think we're going to see a VIX get back to 13. If we do, we'll probably see a big, strong reversal to the upside. That's a look at the weekly chart of the VIX. Let's glance at the daily chart of the VIX, and here you go. See the reversal pattern already starting to form in the VIX after such a big rally on this week. So definitely look to see the VIX reversing. And if the VIX reversing, that means we'll see overall upward movement in the overall S&P. It's a big reversal pattern. So again, right back down. I think we're gonna at least get to the moving averages somewhere around here. You got a hinge lower in the CCI. That's also bearish for the VIX temporarily. Full stochastics in the full stochastics showing starting to reach some overbought territories in the VIX. There's percentage overbought territories in the VIX. So what we could see again, a reversal. But I think we have already established a level of support for the VIX that I think could hold. And if that holds, we could shoot another ricochet to take out this high of 1720. So again, sometime next week, we definitely see a rallying overall market and a pullback in the VIX. All right, let's take a look at the SPY. I'm gonna start looking at the SPY. I know some folks want to get some price targets on these ETFs. So look at the SPY, which is the SPY, represents the overall S&P. Again, normally gaps, when you see gaps in the market, it normally act as price magnets. So that's something that you can always try to hone into. Here's a gap down, SPY gap down on last week, showing some oversold conditions on the daily chart and the CCI, oversold conditions in the Williams percentage and the full stochastics after a strong stretch of downward days or red days. And we got that gap. So, and we have at the moving averages, which is right above price action now. So now price action below moving averages. So the moving averages is more likely to act as a level of resistance. And also when any gaps we see, it's a gap fill right there. We can see price action at least make it back up to that gap before we see some kind of reversal. So keep that in mind. That gap is right around 440. That's SPY. So that'd be our first target. No, get rid of this. So SPY right around 440, and right now we are at about 430 right now on SPY. So we could see a strong bounce. 430 to 430, well, I say 430 to 437, 438, somewhere around there. Back up to this gap fill line right around that 438 area. We could see a big strong move up in the SPY, and then let's see what happens there. We could run into, by that time we should probably see the moving average starting to turn down as well as price action is going up. More likely run into the moving average, and we could see another reversal. If price action doesn't find a way to rally back up to these levels, which I don't think it will, I can't see us getting back up above 445, 447. I think between here and the 440 level is going to act as a level of area of resistance. And if we do pull back down, we could take out this low by the beginning of the following week, if not next week. That is the SPY. All right, moving on. Let's go take a look at the DIA, which is the ETF for the Dow Jones. Again, market just really got pounced on last week, so we definitely had some oversold conditions right now, so we could definitely see a rally. Probably not a big rally, but enough to get some bulls excited and get some bulls trapped again. So we can see we move right back up towards the moving averages. So we can see right around. Let's see if there's a little gap here. It's not going extremely high, but right around 340. Let me see what that is. Let me clear this out for a second here. So right around this 345 level, we could see price action in the DIA. Head right back up there at least. We have to see what happens there. Do we get stopped by the moving average that could be coming down? Well, that could be. And this gap fill will take us right up to about 344, 345. We have to see what happens after that. My guess is that we're not going to break too far above these moving averages. We're probably going to hit these levels and come right back down. So we have to see what happens. That is the DIA. Take a look at the triple Qs. Also, again, we are in oversold conditions. And look at the CCI, which is showing definitely oversold with the hinge, with the oscillator starting to hinge up. That is a temporary bullish sign. Wins percentage in oversold territory. For stochastics in oversold territory with a gap above the price action. So again, same scenario. Step back to see a bounce off of this level of support. See, we hit this level of support before, we got a bounce. It's like we had the level of support now, we're probably going to see a bounce, but I don't think it's going to be as significant as the last bounce. I think price action is really going to start to run into some problems with these moving averages now, especially if you look at some of the longer-term charts. Longer-term charts is showing that we are definitely heading lower, and I'm probably lower for a longer period of time. So these short-term rallies are definitely probably going to be muted quicker than we have seen in the past. Just with that thought alone, let's switch to a. Let me show you guys something on a monthly chart and what we're starting to see. So the monthly chart definitely looking bearish for sure. And look at the monthly chart of the triple Qs. This is pretty much what you're going to see across the board as far as all indexes. But the monthly charts are definitely starting to show that it's ready to give up the gains. So the rest of this year could be definitely detrimental for the overall markets. You got a crossover that's about to happen in the CCI on the monthly chart of the triple Qs. We got full stochastics like it's starting to want to head lower. Wins percentage like it's starting to want to head lower. So that really gives me more confidence or more belief that we're definitely going to see muted rallies and for them to really start to take effect rallies get sold off probably a lot quicker now than we've seen before in the past, because the long-term charts starting to show us that they're definitely starting to see some major signs of reversal. Here's a weekly chart. Definitely heading lower on the weekly chart. Look at that. Look at the oscillators, how extreme they are, starting to reverse on these weekly charts. So any daily charts, these weekly charts and monthly charts are going to supersede them. So any rallies we see, temporary rallies, they're probably going to be sold off real quick. Stochastic still heading low on the weekly chart on the triple Qs. Williams percentage definitely heading lower. CCI has been in a downward trend for quite a bit, and it's definitely heading lower in a major way. So I think whatever rallies we get, don't take it as a long-term bullish reversal. Take it as a short-term position if you decide to play a bullish and get out before we hit these levels of resistance, because it's probably going to see some hard reversals. That's just food for thought. All right, that is a look at the triple Qs weekly, daily, and monthly charts. Let's take a look at the IWM, which is the ETF for the Russell. Weekly chart showing breaking below a level of resistance to stop. Level of resistance that I've been monitoring for quite a bit, and definitely below our 20 per and 50-day moving average. On a weekly, let's take a look at the daily chart real quick. Again, a lot of selling in last week, so we definitely had some selling pressure, which provided some gaps for the market. So we definitely probably going to see some gap fills on next week. And then we're probably going to see another reversal. So same thing with the IWM. We got this gap right here after we broke trend, broke a below a level of support. So we could see it move back up towards this level of support. Then I think we're going to see another reversal. We are in oversold territory on the full stochastics and CCI and the Williams percentage, all in oversold territory. So I do expect that the bulls are going to have some excitement as we go into next week with such oversold conditions for a temporary rally. And we've got to see what happens after that. All right, folks, that's all I have to offer you guys in this video. Hopefully this is something that you guys can use. Until next time, Tim Davis signing off.